I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Tether, the world's largest stablecoin issuer, is doubling down on gold. The company just put another $100 million into Elemental Altus Royalties, a Canadian gold royalty firm. This is right as Elemental announced a merger with rival EMX. That's on top of the $105 million Tether invested back in June, giving it a massive stake in the newly combined company. So what's driving all this? Tether pulled in $5.7 billion in profits during the first half of 2025 from US Treasuries backing its $168 billion USDT token. Now it's deploying some of that cash into commodities, especially gold. The company already holds $8.7 billion worth of physical bullion in Zurich, runs a gold-backed token, and views gold as a natural Bitcoin. Here's why that matters for investors. Royalty companies are like specialized banking firms that provide financing to mining companies. They fund projects up front and in return collect a slice of future production, giving exposure to precious metals upside without mine operating risk. What's the bigger picture here? This could be the next wave of support for the gold market, non-traditional capital flowing in from the crypto world. It's also a win for Canada's mining sector, as fresh pools of money fuel growth in exploration and production. New investors, new capital, and new momentum. Gold isn't just riding central bank demand anymore, it's finding support from an entirely different corner of the market. Silver is on a tear, and there are a few key forces driving the rally. First, monetary policy is fueling bullish sentiment. Expectations of a Federal Reserve rate cut are pushing the US dollar lower and Treasury yields down, making non-interest-bearing metals like silver more attractive. Second, the market is grappling with persistent supply constraints. Deficits were roughly 140 million ounces in 2024 and are projected at 118 million ounces in 2025. Lower ore grades, rising production costs, underinvestment in exploration, and regulatory hurdles are creating what analysts are calling a perfect storm for silver supply. Third, industrial demand is surging. Silver is essential in electronics, solar panels, EVs, AI, and medical devices. In 2024 alone, industrial consumption hit a record 680 million ounces. Looking ahead, renewables, especially solar, could eventually consume nearly all annual silver production by 2050. And here's the kicker. Central banks are just starting to take notice. Saudi Arabia's central bank made headlines in August by acquiring silver through ETFs, including iShares Silver Trust and Global X Silver Miners. While the purchase was modest, roughly 40 million combined, it signals growing institutional interest amid tightening supply and rising industrial demand. Silver's story isn't just about short-term price moves. It's about structural trends in supply, demand, and global institutional adoption that could sustain the rally well into the future. Anglo American has just struck one of the biggest mining deals of the decade, agreeing to acquire Vancouver-based Teck Resources in an all-share transaction that creates a $50 billion copper powerhouse. The merger will rank the new company, Anglo Teck, as the world's fifth largest copper producer. The focus is clear: scale. By combining Teck's project in Chile with Anglo's nearby mine, the companies expect up to $1.4 billion USD a year in extra earnings through procurement and operational synergies. Leadership will be split. Anglo CEO Duncan Wanblad takes the top job, while Teck's Jonathan Price becomes Deputy CEO. The operational headquarters will sit in Vancouver. This is a rare case where a Canadian head office survives a global takeover. The move comes after both companies fended off prior takeover attempts, BHP for Anglo and Glencore for Teck. Ottawa will now review the deal under the Investment Canada Act, weighing whether it represents a net benefit for Canadians, mindful of past head office losses in mining. For investors, Anglo's shares popped almost 10% on the news, Teck's 14%. For the industry, it underscores how consolidation and scale are becoming essential in the race for critical metals, especially copper, a cornerstone of the global energy transition. We're just 2 weeks away from the CEM Muskoka Capital event, our final event of the year. Subscribe on investorbreakout.com now to get the collective insights of top-tier investors in attendance. Get a front row seat to the trends and opportunities they're watching closely. I'm Ryan Iverson. We'll see you next week.